Hello and welcome to the second lesson of the first unit within Eagle Investors Eagle Academy, specifically within trading. Now, in this lesson, we will specifically be going through investment and trading products. This lesson will provide you a basic understanding of what different types of investment and trading products are available to retail investors. And specifically, we will go into stock, option, and fixed income investment products. Now let's get started. Investment products can be set up in various ways, and having an understanding can help you make informed decisions. An entity can raise money on the public market through debt or equity. A lot of times, debt comes in the form of bonds, and equity comes in the form of stock. Now, each product has a different level of sophistication and can represent varying levels of risk and reward. Now, what is a stock? Holding shares of a company represents equity ownership, and you can buy and sell on your own accord. This gives you opportunity to take advantage of a company's top and bottom line growth. In this case, top line typically means sales growth, and then bottom line means net income growth. And we'll get into this a little deeper in the future chapters. Now, investments have different risk reward profiles on varying for varying factors, but a lot of times it's on varying growth factors. Now, in terms of growth and value, you see this a lot within equities, where there's the discussion of how is growth going to perform against value, how's value going to perform against growth. So you see that common split, and a lot of times, a lot of these growth companies are seeing growth above GDP or inflation, 2 to 3%, and a value typically represents dividend and mature companies. Something that really comes to mind, especially when you're looking at growth companies, is a lot of these tech companies that have just been booming due to COVID. And then within value, you can think of more like defensive, consumer defensive names. Think about your everyday products, such as like Procter and Gamble, or for example, trash collection companies like Waste Management as well. Now, what are bonds? Bonds and fixed income products are typically offered by the government or corporations. Bonds are paid over a period of time, and you are given interest payments with the repayment of the initial position or the principal payment at maturity. So say, for example, you put $1,000 into a bond, then over a period of time, you're given interest payments. You can think of that similar to like dividends. And then at the very end, you're given the initial $1,000 that you put in as well. Now, lower interest rate payments typically indicate that you're taking on less risk, or you're looking at a bond on over a longer period. And it's typically used for people, and bonds overall are typically used for people who are looking to diversify their portfolios and potentially take less risk based off the specific bond that they are looking at. And another thing to consider is the rating of the bond as well, as some bonds are riskier than others. Now, what are tips? If you're worried about inflation, tips is something to definitely look into. They are Treasury inflation protected securities, and it's a Treasury bond that is indexed to the Consumer Price Index, which is an indicator for inflation. And with inflation historically trending towards 2 to 3%, there might be a muted return, but there is an element of less risk, as tips overall are backed by treasuries. So essentially, you're taking very limited risk as it's backed by the government. Now, what are options? Options are investment products that can move based on the price of the underlying security. So say, for example, you're trading options on Apple. These contracts change prices rapidly due to the fluctuations within Apple stock as well. And it can be used for purely speculation, or it can be used to hedge current investors for an investor. And it requires a certain level of market knowledge and can be, like I said before, used for leverage purposes as well. Now, here's a brief conclusion of what we just covered. Investors can utilize stocks, fixed income, and option investments depending on their risk reward profiles and goals and objectives. A combination of all three in a portfolio can represent diversification, and you can utilize these instruments to also reduce risk or take on more risk as well. Now, something we will be covering in the future chapter are these three different investment tools in more detail.